Hello and welcome. It's been 13 years, almost to the date, since the private sector was allowed into life insurance. It's been an interesting journey ever since. The market has grown, a lot of private players have prospered, but it's perhaps not achieved the same levels or targets of financial inclusion that it was hoped, or at least the government was hoping at large. There are various success stories within that and perhaps not too many success stories within that. So let's understand one story which is perhaps more of a success story in terms of at least achieving the penetration that they started out to achieve. I'm joined by Rajesh Sud, CEO and Managing Director of Max New York Life. Rajesh, thank you very much for speaking with us. So you're one of the early entrants in life insurance in India as the sector was opened up. Tell us about the journey, if you were to look back 13 years and sum up what have been the key high points and perhaps not the high points.
Sure, thank you. We are now Max Life Insurance. We did go through a bit of a change on the shareholding side as well. But yes, it's been a tremendous ride of almost a roller coaster, if I may call it that. From the joyful entry 13 years ago for ourselves, and then the massive investments that we made in distribution, in training, in ensuring that we got a certain product differentiation going in the market. Growth rates were strong, and this kind of trend was just true for us as well as for the rest of the industry till about 2008, when coupled with both economic slowdown as well as some changes in the overall I would say understanding of how products ought to be bought and sold in life insurance and regulatory changes thereafter, there has been a significant change of environment. There's been a drop in overall numbers, not just in growth, but industry has actually shrunk, and today where the industry stands is kind of similar to levels of 2007-8. So we've kind of gone back a few years.
So why has that happened?
Combination of factors, like I said. Large part of it has been a change in regulation, brought about again by what I would call was somewhat wild expansion that happened in the heydays, where contracts that perhaps were not better understood by customers and maybe equally not well explained by industry distributors and sellers led to a bit of a remorse. Also an interregulatory spat between SEBI and IRDA about who should kind of regulate those kind of product designs. And also the economic slowdown. Inflation's eaten into savings. There's also been a preference for physical assets like gold and real estate. So all of these factors have contributed to a situation where industry has not grown over the last couple of years.
And yet from a penetration point of view, we are still only just above single digits.
So yes, if you talking about penetration of insurance premium as a percentage of GDP, it's grown.
Or the number of people who have insurance in this country.
Versus, so that's two different ways to look at it. It was at 1% when the sector opened up. It had climbed up to about 4.5% in the year 2008 or 9. It's now down to shy under 3%. So 1 to 3% over 13 years is still good. And also when you look at the fact that the GDP of the country itself has been growing at a reasonable clip over the last decade or so. So that's one way. The other way to look at it is like you measured, which is number of people covered. And that actually is something that's quite unique about our business. As an industry, we are perhaps the most retailized financial instrument, where roughly about 5 crore policies, 5+ crore policies I would say, get sold every year. We cover, at this point in time, there are no exact numbers of this, but I think about 30 crore policyholders in current force, and that's substantial. If you really look at numbers of people who would participate in financial savings per se, that's a significant penetration number.
Right. So, what is the or what have your own learnings been as Max in this journey, as as a private company who's trying to? I mean, have you found the going as easy as you thought it would be when you started out?
Well, nothing's easy in this country, I guess, and certainly not with 23 other competitors, including the one giant sitting in there, LIC. So it's not been easy by any stretch of imagination, but it has been very rewarding. A couple of things that we have stood for, and actually that's one reason why we feel very proud about having consistently outperformed the market, is that we've understood life insurance what it is. It's truly, in our mind, a unique instrument. It is an instrument of long-term savings, and I underline the word long-term. And it's also an instrument of protection. In India particularly, I think the savings part is kind of overemphasized as compared to the protection side, which is now beginning to get more and more traction. But nonetheless, it does both. And there is a need for it. In a country where there is no social security, there are no pension plans, even the joint family system is kind of increasingly under pressure. There is a financial vulnerability that Indians live with. And I think we have this tremendous faith in God, which is the best form of savings, I guess, that we believe in. We go and make offerings to temples, but we perhaps would be better off taking charge of things ourselves and starting to put systematically money away in plans like life insurance, or could be other things as well, to plan for our own financial future. And when you go back and ask this of Indians, it's very, very interesting. The first question, what happens if the breadwinner doesn't come home tonight? There's a little bit of taboo, first of all. How dare you? You can't ask this question. Even if you do, you persist. The second is, we'll be all right. We'll be looked after. And it's basically reference to family, perhaps, and friends and all that. One more level of query on that, and how long? It kind of starts to crumble very quickly. And the vulnerability, as we've assessed through research work that we've done, is that basically Indians have money for about 2 to 3 months of survival. That's the general state of the nation. And I'm talking of middle income and above. I'm not even talking about people who obviously are still struggling to kind of, have a livelihood. But so that's where
frightening.
we are. It's frightening, absolutely. Yeah. And again, the other frightening part, and I'm sorry to say it this way, but it cuts across any amount of education that you've had, any amount of financial savings, or rather the income levels you come from. It is not as if the more educated are better prepared. It's just not holding out. So I think there's a crisis, at least in our minds, of having to build a secure India, and it's not just food security, but equally financial security that we should be talking about. And private sector and certainly the government have a role to play in that.
So how have you converted this learning or these learnings into the way you market your products and you reach out to customers?
So we've tried first and foremost with exactly this thought in mind to design products that are truly long-term savings and protection instruments. So we've kind of somewhat kept away from what we find maybe more topical, flavor of the month kind of opportunities that come our way. We don't do that. We stick to what we believe is core value of insurance and try and kind of work to that. The second thing where we really translate this gap that I was talking to you about into trying to cover it and make it a reality is how we approach the needs of the person, the consumer. And we pride ourselves in actually having an advice-based model where our people are trained specifically, and we have massive investments going to training quite uniquely again in the industry, to train our agents, to train our bank partners and so on and so forth, to basically try and uncover the need and then sell a solution to that need and not push a product irrespective of who you are. That's how we kind of contribute to that. The third area again in this business, which is particularly important, is customer retention, because we're really talking about 20-year contracts and more. And it obviously doesn't make sense if you have a product, you sell a customer, you incur all the costs, and the customer kind of doesn't keep with the product after 3-4 years. Everybody loses in the chain. So we've actually again been very focused on that, and we currently again pride ourselves in having the highest customer conservation ratio in the sector for almost 4 consecutive years. So these are just small elements of what I'm saying, but beyond this, I think there's an overall vision that we've set for ourselves. The vision really is to be India's most admired life insurance company by providing financial security to customers. So we've made purpose very strong, and we've deployed that purpose into everything we do. Our goals are defined by lives we touch. It's also profits, of course, but net, it's not just profits. It's about serving a larger purpose that I think all businesses have.
So what's going to bring back people into understanding the need for protection and then investing in insurance? I mean, whoever it is, whether it's Max or LIC or whoever.
Sure. I think there's more than one answer to that, and unfortunately none of them are complete. We will have to certainly start with education, awareness. A lot has to be done on that side. I particularly am working in the Life Council, which is our body, to kind of create some degree of an awareness campaign and awareness drive that all participant companies can kind of come forward with and work with, of course, IRDA, our regulator, to make this a reality. Equally, I think there is, in our mind at least, reason to promote financial savings, long-term financial savings, by incentivizing it. We have seen examples of markets like Russia, where the minute they took away the tax savings, so to say, the industry crumbled, right? So I think in a market like ours, where people are still driven a little bit by that sentiment, it's important that we continue to promote it, differentiate it from shorter term savings.
Sure.
Maybe we don't need those, but clearly life insurance also has a big role to play in making long-term funds available for development of the infrastructure sector and so on and so forth. Kind of goes well with us. So given where India is in its economic development, given that the government does require source of funds, we do act as a strong domestic institutions, which kind of counterbalance the FII money sometimes. There is reason to promote the industry. There's reason to promote the consumers' thrift, so to say, in it. So those are some things that I think we need to do more of.
So how do you see things shaping up in 2014?
Well, 2013 has been another year of transition, of regulatory change. A lot of stuff on the product side has been announced, and we're all kind of dealing with that. 1st January, all these products will actually now come into play. So the time that has been afforded to the industry has been used to design new products, train our distributors, and hopefully therefore there will be less of a disruption. But given that this is, it takes time. It takes time for companies to adapt systems, operating processes, for us to change, all the so-called training material that's out there, and to retrain all our agents. And this is a very, like I was sharing earlier, it's a retailized industry. It's a well-distributed industry. There are about 20 lakh agents who serve the industry, and there are more, out of bank counters and so on and so forth. So we're talking of a very large number of people being impacted, and therefore I think there'll be a bit of a adaptation process that we will go through. Depends again on how,
and that's because the products that you sell are changing in nature. And
that's right.
Because of regulatory.
That's right.
Okay.
Because of regulatory change.
So can you give me one quick example of a product that was then and will be now?
So let's say very popular endowment products that are there. These are these long-term savings products, 15-year, 20-year kind of, you pay me X amount of money every year. At the end of 15 years, we'll give you this if the event doesn't happen in the middle. There'll be changes to how those are designed, what value you might get from them if you kind of don't keep the contract for the full 15 years, but let's say leave after 7 or 8 years of your paying term. The company will actually now offer you more value back. The distributor compensation for shorter tenure products has been reduced. So again, driving to the same point that we've been saying, that this is truly long-term savings, it should be kind of incentivized like that. That's what's beginning to happen now.
Sure.
So those are some changes that kind.
So overall, 2014, are you looking at it more optimistically?
Again, a combination
no
of economic, if I may say, growth will certainly be the macro determinant of how consumers make money, save money, and so on and so forth. But if you assume that the worst is behind us and we'll have some revival, though I guess that the opinion varies on it, I would think a year of growth, also because we've kind of had degrowth over the last consecutive 2 or 3 years. So I think we're now pretty much at the bottom of the cycle and we'll start to see revival. I would still put it at maybe high single digit, early double digits, about that kind of a number, 10-12% at most.
Which is not bad. I mean, at least if you were in other parts of the world, I guess.
That, of course, that promise of India as a growth economy, as a growth country, certainly remains. And these numbers do look nice when you compare them to the Western world. But again, I think my view on that is we should look at it from the potential opportunity we have here. There's a lot more to be done. There's a lot more to be achieved. So,
right, Rajesh, wish you all the best and thank you very much.
Thank you.